Ladies and gentlemen, thanks very much for joining us this afternoon at this Financial Mail Grit Standard Bank event. It's the largest syndicated sustainability-linked real estate debt facility in sub-Saharan Africa. But it's quite a milestone, and I think it's a milestone we're celebrating in that it's a singular African loan for a pan-African company, which has grown exponentially over the last 8 years. We have the CEO, Bronwyn Knight, on the line from Dubai.
We're a business that was set up 8 years ago with the ambition of being multi-geographic, multi-asset class, global tenants, and servicing the real estate needs of global tenants, focusing on tenants that could deliver hard currency to ourselves. Sort of 8 years ago, this was a business with an asset value of just over $120 million. Today, we sit with a portfolio of $850 million over 8 to 9 various African countries geographically. So effectively, sort of where are we today? We're a business that has grown significantly. We are a business that has invested in North, West, East, and SADC Africa. We are a business that has invested across a number of asset classes. So it's taking good assets, performing assets in complex regions like Zambia, regions like Ghana, being able to cross-syndicate those into other performing geographies and being able to really look at around just securing those geographies in relation to being able to create a product that is able to scale up from a debt structuring perspective. So what it gives us as a business and what it gives us as our key stakeholders, both investors and financiers, it gives us a sustainable platform. It gives us tenor, so longer dated debt. We're able to hedge out a lot of our interest rate exposure in relation to rising interest costs, as we've seen from an economic perspective. But furthermore, it allows us, as I mentioned up front, to create a scalable solution. It means historically, we were a multi-asset class, as I've mentioned, and will continue to do going forward. But where we're going into the future is we're going to be focused on impact type assets. So what are impact type assets for us? Impact type assets are through our development partner, Gateway Greer. We're building 2 healthcare projects, the scalability of industrial manufacturing, cold storage, creating infrastructure in the regions and the countries that we actually operate in. You would have seen that specifically our project through our development partner, the American Embassy in Kenya, was led by a predominantly women-led development team and women on the construction site itself. So never mind for emerging markets, but globally, we are creating impact on a global scale. We are setting global benchmarks. So to align with our financiers who are recognizing the effort and the contribution that we are making to the African continent and being able to have that linked into a program of this nature is absolutely fantastic for us. To be able to launch a facility on this scale, and as you correctly said, even for global markets, this is actually a global benchmark. As you are aware, we have got a London listing. We are primarily listed on the premium segment in London. So for us, really to close off the closure of this year with this particular program, to have it that we are able to upscale it into the future, it creates capacity for us to do additional real estate and additional redevelopment of the back end of this facility. The fact that it's impact-led, the fact that we have seen banks like ABSA and Nedbank alongside Standard Bank is really, really fantastic, supporting this debt sort of restructure for the business going forward. So, Giulietta, I think just really in summary, it means that both Standard Bank and ourselves absolutely found the way in relation to this transaction.